VAT rationalization was carried on with three pillars. Pillar one was the structural reform in terms of looking at corrections of inverted duty structure. For the people who may not be aware, inverted duty structure is a scenario where my output tax is having a lesser rate of tax compared to the tax which I am paying on my purchases, and thereby I end up in a scenario of accumulating the input tax credit. So there were certain sectors where the refund of this input tax has been denied, and there is also a challenge of encashing the credit which is arising out of the input services. So they looked at all the areas where the accumulation of credit is happening, and they wanted to do a correction. That was one of the background which they started with doing the rate rationalization. They also wanted to resolve the classification issue. One such classic issue which we had personally dealt was the flavored milk, where there were two classification which was very near, and the flavored milk was having an ambiguity of 12% vis-a-vis 5%. So they looked at all this close classification, and they have resolved, and they have made it into one rate. Either you classify under two HSN, possible HSN, but the rate should be the same. So that is an effort which has been made in many of the goods. I don't say it's an 100% being done, but still many of the commonly disputed goods have been touched upon, and they have resolved it. They were also looking at stability and predictability. Thereby they wanted to reduce one possible rate and make it more predictable. So the second pillar was about the rate rationalization, where they wanted to reduce the rate for the common man items and also the aspirational goods. Reduction in the number of slabs. So 12 has been done away with, most of you are aware. So there was a lot of challenges which was happening as far as the registration is concerned. Getting a registration was becoming tough day by day. That was also because of the background that there were a lot of fraudulent taxpayers where they were taking registration and not passing on the revenue, not paying the revenue which has been collected from the recipient. Funds has been talked about, where they're promising a 7 days refund for a provisional assessment, which is for the IHD and also for the exports. Coming to automotive sector, which is been talked about, small cars have been reduced, which is up to 1500 as the case may be, and which is 4 meter, less than 4 meter length. That is the small and the what you call the sedan versions and the hatchback version cars. Broadly, I can categorize it like that, is coming to 18% from the existing 28%. And 40% is there for the luxury cars, which is more than 1500 cc and more than 4 meters car. So previously there was a tax of 28%. I think there is an error in that. Changes from 25 I have made it. It should be 28%. It's a typo error from my side. It compensation cess was up to 22%. So that has been reduced to around 40% now. So there is also a net reduction which has been there. Commercial vehicles has been reduced from 28 to 18%, and motorcycles more than 350 cc has gone to 40%. Rest will be at 18%. So bicycle parts is been reduced to 5% from the existing 12%. The automobile sector. And coming to the textile, they have made it in the document. If you look at the fine print, they say that we are not changed the rate of tax, but we have only changed the slab. But there is a catch in this. Earlier, the textile, the garments, this is the stitched garments, was at 12% tax when the MRP was less than 1000. And beyond 1000 was at 18%. So now they have increased to 25%. Was at 12%. Now they have increased it to more than 2500 will go to 18% from the existing 12%. So there has been a reduction and increase both is happening on the textile. And transportation. Most of you are aware the life insurance which has been taken by individual has been exempted. and whatever is there with the group medical insurance and other policies continues to be taxed as what has been taxed now. Passenger transport, goods transport, 5% without ITC, there is no change. Earlier, there was a benefit of 12% with ITC, that 12% becomes 8%. That is what is happening on the transportation sector. And so what I'll another change which has been there is as far as the GST tribunal is concerned. So this tribunal is was waited for long. There is a lot of backlog already has been created. So September end, by the end of September, it is going to be operational, and June would be the last date for filing the appeals for all the backlogs. And um, the industry may have to list out all the appeals which has been there, prepare and keep it ready for filing, because September is just about a month from now. 2 minutes to elaborate on this action points which a business needs to do is to one is to update the ERP and accounting system with various your master vendor master, or your product masters which has been there, and also the customer masters which with the new rates, and also review the contracts which is you have entered, the purchase and sale contracts, and see how the rate change has to be given. Give a communication to your entire supply chain system as to the how the rate impact you are going to work on. Work on your ITC impact, how it is going to happen. It is going to increase, decrease. Your cash flow is going to increase. How it is going to happen is something which you need to look at. Very important is you need to get the product or your service classification audit, which is important now, because right classification, right adopting of the rate is required. Then training the team and getting ready for the GST tribunal. And most importantly is that this is a press release. Mostly the press release and the final version of the notification should be matching, but nevertheless the final decision should be always taken by looking at the final notification. So all